Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back to TFR for another edition of Investor Stories. On this segment, the experts talk about a startup that failed and the causes of that failure. Here's the segment called Post-Mortems.
On today's special segment, we have Dharmesh Thakker of Battery. Dharmesh, can you tell us a story about a portfolio company that failed and why it failed?
Yeah, I think failure is a different definition for people. I mean, for us, something that doesn't kind of meet our return threshold, even if we get, a 2x or what have you, it's not exactly a success, but I wouldn't call it a failure. But if I take that one extreme example, I can't name the company right now and going through it as we speak, where we unfortunately have to wrap things up and find a home. It's a company in the collaboration space, exceptional entrepreneurs, great track record. I'd fund them again in a heartbeat. But I think after about 2.5 years of trying, I think we very quickly figured out technology and product are not the same things, right? So we have a platform here that enables, busy professionals to be productive. And we built some really amazing scalable technology for, better time management and better productivity and calendaring and task management and the like. And it did a lot of different things for a lot of different people, but not one thing for one specific audience really, really well, right? And so 2-3 years in, you look at the user traction and it's really hard to pinpoint and say, hey, this is the one thing or the two things that are working really well. And now we're going to load up the bus and just scale it out, right? And so if I look back, I think we should have hired the product team really early on, which could distill down like the 20 things the technology platform could do and shape the 1 or 2 things the product team wanted to do for a very specific audience. So I think it's a lesson learned to focus early, re-examine kind of your assumptions around which area and which persona you want to focus, and build a great product, not just great technology. So I think it's a lesson well learned. Maybe next time we talk, it'll be public and we can talk about it. But that's one example that comes to mind.
I love the example. I mean, we just got done passing on a startup, unfortunately, amazing startup that is doing something super powerful within customer success, something I've never seen before, but it does so many things for so many different use cases that couldn't get there.
Yeah, so, one thing one of my mentors told me early on is like, startups exist because large companies like to buy products from startups, not platforms. If they want to buy a platform, they'll just go buy IBM Watson. Like they don't need a startup for that, right? As a startup, you have to build a great product that does one thing really, really, really well. And you have to know who the user is, what their pain points are, and go solve that really well. So I think focus is more important than ever before. And often you find, super smart people that can do so many different things that it's hard for them to focus on one thing. And so I think you have to complement those technologists with product folks and design folks who can distill it down to one thing. And look, if the one thing is not the right thing, you can always iterate and try something else, but you have to focus.
On today's special segment, we have Billy Libby of Upper 90. Billy, can you tell us a story about a portfolio company that failed and why it failed?
We had an investment in going back to the thesis of kind of these derivative businesses around disruptors. Airbnb, same thing, right? It creates a whole new way for people to be entrepreneurs and like buy and rent out places. And the challenge with Airbnb is consistency. Right? If you're traveling with your family or for work, you might be reluctant to use an Airbnb because you just, you can't take the 1% risk that it's not what you want, especially for business, if you're traveling institutional business. Yeah, that's true. So there was a company called Domio that said, like, we're going to build apartment hotels, like what Sonder and a lot of others have done. So they'll basically, create like an Airbnb, but designed for group travel. I just think when COVID hit, a lot of our assumptions around revenues and stability of certain markets, it was just difficult to predict. And I think there were some things that we learned on the structuring side there that weren't didn't give us as much of the downside as we may have thought. So I think that company ended up not working. And so that was a portfolio investment that I think like right space, right thesis, but just kind of got caught in the crosshairs of COVID and travel. And, what I learned is that you really have to be so decisive. If things aren't going well, how do you cut costs and how do you preserve runway? And, just like, how do you really give yourself more and more ways to survive and win? And that's just, a lot of learnings from that, I think, for me.
On today's special segment, we have Emily Paxhia of Poseidon. Emily, can you tell us a story about a portfolio company that failed and why it failed?
It's all about people. There was this company called Tradive back in the day, and it was trying to be kind of the marketplace platform for the industry. Talent on the team seemed bright. They came out of a accelerator, which now the founder of that accelerator is on my team, Patrick Ray. So grateful because he's such an amazing leader in the industry. And it's been really fun. We call it kind of like a super group that we brought people together on our third fund to do this with Canopy Boulder team. I was on the board of that company with someone from Canopy Boulder. The founder just kind of went off the rails and started communicating directly with God, and just everything went off the rails from there. Then team fell apart, everything. I mean, it's great to communicate with God. I'm very happy. Godspeed to anybody who wants to communicate with God, but maybe do it on your own time and not with investor capital. And so it was clear the attention had shifted from the business to a new mission that he was on, and everything fell apart from there. And there was some bad management practices that ended up resulting in a lawsuit around some sexual harassment, and the company couldn't get away from it. And so it failed.
All about the people, right?
All about the people. There was an article that was written about that. And I think I said something like, we have a due diligence checklist, and the new thing I'm going to have to add to it is, do you communicate directly with God?
On today's special segment, we have Ed Sim of Bold Start. Ed, can you tell us a story about a portfolio company that failed and why it failed?
Yeah, I wouldn't say failed, but maybe they're too early. I like to say like pioneers get arrows in their backs, in the sense that we like to be early. We like to be a couple years early. So look, at the end of the day, I'm just trying to think of a company that publicly failed. I guess kind of what we try to do is we help our founders find kind of exits. The other reason you find technical founders is because there are acqui-hire opportunities down the line. And look, I mean, we've actually helped founders kind of get sold to a bunch of places where they end up getting some good options. They see their product live on, and maybe we get 50 cents on the dollar. But I don't know publicly if anything I can talk about right now about that, but let's just say that's something that we also believe is important, is helping founders find a home for what they have. Because guess what? They usually come back to us when they get ready to start their next thing after they've been there for a couple of years. And we take pride in helping our founders, find a home.
Any common reasons that you found things don't work out? Yeah,
as I said, we do these we love investing in technical founders, and I think the technical founders that really understand whether they had the experience or not, but understand go-to-market. I think go-to-market and product go hand in hand. How you build your product and how you think about go-to-market. For example, if you're a new product-led growth company or a developer-first company or open source company, that's a certain way to go to market, but that's also a certain way to build a product. Versus if you decide to go for $100K, $200K, or $1 million deals, that's a top-down product, which may require, some a pre-sales engineer, direct selling. It might require, a 90-day POC. So I think understanding how those two fit is important. The second thing is the ability to tell a story. Meaning that a lot of founders may get lost in the sense that, hey, I've got this great technology, but they don't really understand the value that they're solving. What is the value proposition? And the thing I like to say is that a value proposition for a company is not the same as a value proposition for an individual user or buyer. And you have to make sure that that the user wants to use your product. Because I can see a lot of companies, by the way, that we can sell to like a VP of whatever, VP of engineering. And if you sell to that person, but the users don't like the product and they're not going to use it, it doesn't get renewed. And guess what? Even though in the early days you sell 10 of those things at 100K pop, And if it's not being used, there's no renewals. And guess what? The business is not going to survive no matter how much money you raise. So I think it always goes back to the user. It goes back to telling a story and understanding kind of what problem you're solving.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.